I've been having a quick look at Barclays. They reported their financials. I think it was this morning, or it was late last night. And to be fair to Barclays, this report is pretty strong. They posted about 1.5 billion in income, which is about 500 million more than analysts expected. It's about 150 million above last year's position. And this is despite they've still got ongoing litigation in the US at the moment, which has soaked up about $1 billion in cash, and they had a trading irregularities fine and continued fine and continuing to be looked into. It's racking up quite the bill. Most of this came from fixed income, currencies and commodities. That's a special part of Barclays, and that particularly strong performance with that. It was up 96% year on year. Net interest margin had a healthy jump as well. That rose from 2.53 to 2.78%. So this is the difference between the interest that a bank pays and the interest that it receives from the loans it makes. So it's the delta between the savings rate and the loan rate. The higher the better as an investor, the lower the better if you're a consumer. Return on tangible equity, this is just equity when you strip out all the crap like goodwill and stuff like that. Came in at 12.5%. If that's a metric you care about, I would argue you probably should when it comes to a bank. A couple of weaker points, CET1 ratio slipped. This is their ability to absorb shocks and any kind of really poor macro environments. It slipped to 13.8%. I like to see that a little bit higher in a bank. UK banks tend to sort of hover around the 15 plus mark. So, but then again, Barclays is currently being sued. So maybe when that comes back in, we should be able to see that creep back up. But yeah, Barclays was interesting. Market didn't really care about it. It looks like it was really flat on the day. But is Barclays a stock that either of you are interested in?
No, but I am interested in the UK banks generally, though. I've looked at Barclays. I did a little bit of looking at NatWest, Lloyds and HSBC as well. HSBC is a slightly different sort of animal. It's kind of focused on both the UK and kind of a bit further east. Barclays, as I saw it, was kind of edged by Lloyds on net interest margin and on CET1 ratio. I think you're looking at exactly the right thing, by the way, when it comes to return on tangible equity, and then I would value a bank based on its price to that tangible equity, basically. So the way I sort of think about banks, I sort of think, well, what return am I looking for? 15%, call it that. How much do they make on their equity? Fair enough. Now that tells me the price to book multiple that I have to pay for this sort of thing. The UK banks are interesting. I sort of think of them as over-regulated, under-profitable, but that return on tangible equity is not bad. It compares pretty favourably with some of the other banks that we sort of more commonly talk about, or that I was talking about, I think, last week.